The year is 2021. The housing market is going crazy. Prices are steadily increasing and just going higher with seemingly no end point. Buyers are fighting over anything that comes on the market, and any new home that comes on the market is getting 10 offers within days. Now, with all of this going on, any of us that have been through the recession of 2008 automatically start thinking, hey, is the housing market gonna crash? Well, stay tuned and let's dive into this subject. What's going on, everybody? Once again, this is Rob Bailey, realtor and home marketing expert in the Chicagoland area with Arnie Realty Inc. And today we're going to be talking about a hot topic, which is the real estate market going to crash by the end of this year or maybe even next year? Since the housing market has become so hot lately and home prices have been rising so high, it's only natural for us to start wondering if this housing market is going to eventually crash again like it did in 2008. We all remember what it was like back then, and none of us want to risk losing our hard-earned money like that again. So stay tuned, and I'll be going over exactly what's going on in this housing market today, as well as if we need to be worried about another housing bubble. Also, be sure to hit that like and that subscribe button and let me know what other topics as far as real estate that you want me to cover in the future. Since we're on the subject of the housing market and if the housing market is going to crash or not, I have to mention that at least since 2018, there's always been somebody who has predicted that the housing market is going to crash. When I listen to these people's reasonings, it's always one of two things. Either one, it seems like they're just negative people and they always think something bad is going to happen. Anything that good happens, they think, oh, it's only going to last for so long and the housing market has to crash and come back down. People like this always seems like, well, once again, something negative is going to happen, so they'd rather just play it safe and just not invest anything. Leave it up to these people and they'll probably just leave their money in a mattress somewhere. Then there are the people who are hoping the housing market will crash because they really want the home prices to go back to the prices they were back in 2009 and 2010 when there was a recession, so they can now buy properties for 50 or 60% off. They're really just hoping that the home market will crash so they can get a good deal. I would be a little bit cautious listening to anybody who has a mindset like this. Because if the housing market actually does crash, it's not just home prices that are going to be affected. People are going to lose out on their savings. People might even lose out on their jobs and their employment. They might lose out on their income or their livelihood. So if the housing market crashes, it's not just home prices that are going to go down. Your buying power or the amount of money you have is going to go down as well. So the irony of thinking like that is, even if you're hoping that the stock market crashes, you probably won't be able to buy a home anyway, even if that does happen, because your money is going to be hurt as well. And for those who just like to sit back because they always believe negative things are going to happen, remember, no risk, no reward. So there's always going to be some risk involved with real estate, but if you never try, you're never going to be able to make money in real estate or be able to save up your money by owning your own home instead of just paying your landlord and wasting all that on rent. Even if you are planning on keeping it safe and hiding your money in the mattress, remember, there is always inflation to worry about, and there's nothing you can do to stop that. The amount of the dollar today isn't going to be worth the same power a year from now or even a few years from now. So your buying power isn't going to be same because there's always that silent killer, which is inflation. Now, the main issue that's happening with the housing market in 2021 is the issue of forbearance. A forbearance is when the mortgage company or your lender allows you to temporarily stop making payments because of some sort of hardship, which in 2020 and in 2021, that hardship was caused by the pandemic or COVID-19. During the pandemic, there were a lot of people who lost their jobs because the economy shut down. Because of that, they weren't able to make their mortgage payments, so they were allowed to go into forbearance by their lenders. According to the Mortgage Bankers Association, or the MBA, there are some around 2.5 million homes that are currently in forbearance. So that's a lot of people who weren't able to pay their mortgage, so their mortgage is just being temporarily suspended. These forbearance programs were only designed to last about a year and a half. So if someone filed for forbearance at the beginning of the pandemic, which was March of 2020, these programs will be running out around September of this year. So if these programs run out and people still aren't able to pay their mortgages, now they're at risk at default or at risk of foreclosure. People are afraid that these foreclosures are going to start coming back on the market at discount prices, and all of these discount homes are going to then crash the housing market. And let's not forget that since home prices have been rising so crazy, many people believe that there is no way the housing market can keep this up. I mean, once again, we all remember 2008, right? We remembered how high home prices were and how hard it crashed. So we have in the back of our minds, it's pretty much built into anybody who went through that recession at this point that, hey, home prices aren't going to stay up that high. They eventually have to come back down and crash. With all that being said, I personally do not believe that the housing market is going to crash anytime soon. But before I get into my reasoning as to why I don't think the housing market will crash, first let's get into exactly what happened with the housing market crash of 2008 and why it's different from the housing market today. Before the recession of 2008, it was real easy to get a loan. Banks or lenders didn't even verify your information back then. They didn't verify how much income you made. They really didn't verify your wages, your check stubs, anything like that. You can basically just tell them how much you made and they take your word for it and give you a loan based on that. Since the banks were making all of these unsafe loans, eventually all of these loans defaulted because the people couldn't keep up with those mortgage payments. Once all of those mortgages went into foreclosure, then the housing market crashed. Fast forward to today, where lenders are very, very strict when it comes to income requirements and checking your income, your wages, as well as checking your credit, everything. Anybody who has bought a home recently can tell you, once you've gone under contract, they look at your finances with a fine-tooth comb. If your mother gives you $100, the bank will probably ask you what's going on with this money and if you owe this money back to your mother, because it could hurt your chances of owning a home. So today, the requirements from lenders are a lot stricter, so loans are a lot safer and at a lot less risk of default. Even though there are a lot of forbearances on the market, the real issue isn't that banks are making risky loans. The real problem is that there simply aren't enough homes for sale. There are a lot of buyers out there because interest rates are so low, which is because of the pandemic. Now that all of this buyer demand out there, the housing inventory just can't keep up. There also aren't enough new construction homes because the new home market hasn't been as strong ever since the recession of 2008. So builders aren't building enough new homes to keep up with the buyer demand. As long as the housing inventory is low and the buyer demand is strong because of low interest rates, we are going to see prices continue to rise. Let me put it all together for you and let you know why I personally do not believe that the housing market is going to crash anytime soon. Now remember, this is my personal opinion, but this is what I'm basing it off of. First, lenders still have strict requirements when they give out mortgages, so they aren't just giving anybody a loan. The mortgages are a lot safer and at a lot less risk of default, unlike it was back in 2008 where they were just giving out loans to anybody. Lenders today are making sure that they're verifying your income, they're checking your check stubs, they're verifying your credit, and they're requiring a ton of documentation before they loan you out any money. So I'm not really worried on that front. Next, the housing inventory is still very, very low. The reason home prices are going up so fast is because there aren't a lot of homes for sale. Think about the PlayStation 5. You can get it for retail value at around $600, but because there aren't enough of them out there for sale, people are going to aftermarket websites and paying for over $1,000 for them. The same thing is happening with the housing market. Since there aren't enough homes for sale, there are 10 buyers fighting over one home, and that's just going to keep driving the price up until the low-end buyers can no longer afford the home and, the supply matches the demand. So as long as the housing market is still low and there aren't enough homes for sale, like I said before, prices are just going to continue to go up. Next, back in April, the Fed announced that they were planning on keeping interest rates low until 2022, if not even further out. As long as the interest rates stay low and mortgage rates stay low, buyer demand will continue to be high and there will be a lot of people out there looking for homes. As long as you have this strong buyer demand, along with the low housing supply, prices are going to just continue to rise until either A, the supply meets the demand, which means either more homes have to come on the market or new builders have to build enough homes to satisfy this buyer demand, or B, home prices rise so high that people can no longer afford homes and then prices eventually even out. Now let's address this issue of forbearance. In my opinion, now let's address this issue of these 2.5 million forbearances that are out there. Now let's just say that worst case scenario, a lot of these people aren't able to pay off their mortgages once the forbearance period ends, and there are a lot of foreclosures that hit the market. In my opinion, because buyer demand is so high and that there are so many buyers out there looking for homes, if a lot of these foreclosures hit the market, these buyers are just going to swallow it up because there are just that many buyers out there looking for homes because the interest rates are so low. Actually, I don't think it would hurt the market at all. It would just help the market to even out quicker. But in my opinion, it shouldn't cause prices to crash or prices to go down. That just means that there will be more housing inventory out there for the buyers who are having a hard time finding a home. So once again, the reason why prices are going so high and are increasing so fast now is that there simply aren't enough homes for sale. So until the supply of homes increases, the housing market will continue to be hot and prices will just continue to rise. Any questions for me, please feel free to reach out to me through my website, which is baileyacres.com, or feel free to leave a comment below. Once again, my name is Rob Bailey, realtor in the Chicagoland area with R&E Realty Inc. Thanks a lot, guys. Have a good day.